Hello guys, you are welcome to this live webinar. So we are going to be talking about the new tax reform and how it's going to affect you as a personal income earner, a salary earner, or a business person. So it's going to be very interesting, and the class is going to be filled with value. So if you are here and you can hear what I'm saying, I'm audible and clear, then please type yes in the comments so that I will know that you can hear me clearly. If you can hear me clearly and see my screen very clear, then type yes in the comments. If not, then click the top right corner of your screen, then put your click on settings, click on advanced, then put this live class on 1080p. Yeah, put it on that resolution 1080p. You can see me very clearly. All right. So do that. Let me give you 1 minute to do that before we proceed. All right. Okay. Yeah. So you are with me, right? You can listen, you can hear what I'm saying, and you can see the screen well. All right. So I'm going to share my screen right now, and let's start immediately. So guys, yeah, we're going to be talking about a lot tonight. A lot. Screen. So if you can see my screen clearly, just say something, please. Can you see my screen clearly now? Yeah, type yes in the comments if you can see my screen well. You can see everything on my screen, and type yes in the comments so that we can proceed. Type yes in the comments if you can see my screen. Type yes in the comments if you can see my screen clearly, so that I will not be explaining stuff when you cannot really see. So the whole point would. Okay, type yes in the comments if you can see my screen. Okay. Okay, you can see my screen. Well, all right. So I bet you can see my screen well, right? So um, let's start. All right, guys. So tonight, like I said, we're going to be discussing about the new tax reform and how it's going to impact like you as a business owner, your trader, affiliate marketer, small business owner. You sell shoes, you sell clothes, and the likes. So this new tax reform is actually going to affect a lot of people, most especially those that are into business, small businesses. So and also personally, of course, personally. So the first thing you should know about this new tax rules is um there are going to be a lot of people that will fall victim because of ignorance than people falling victim because they are really owing tax. You get, so like not knowing this is going to like do more harm than even paying the tax, like even having to pay the tax and stuff like that, because it's part of our us as Nigerians. We don't really like learning this boring stuff when it comes to tax, financial stuff. Of course, even myself, I don't really like financial accounting when I was in school. So I understand that. But as far as you are a business person and you know you want to be making money, then you have to be learning this type of stuff, not for anyone but for yourself, and to keep your business on the safer hands. Say FIRS comes to you and asking you about your taxes and stuff. You have no records of your earnings. You don't know how what money comes in and stuff like that. So that's just the downside of it. And next year, you're going to be seeing a lot of scammers coming out trying to take advantage of this new tax reform, like get people to fall prey. Yeah. So that's why you have to be educated on stuff like this. When you're educated, you have your finances in check. You record everything. There is no way you're going to fall victim to any of these persons. So probably maybe an accountant, so-called accountant, will say like they want to help you to manage your finances and stuff. And because you don't like this boring stuff, you will sharp you agree because you feel like it's cheap. Oh, you can just pay someone so that that person will just. And truth be told, it's something that you can do it yourself. It's not really that much of a big deal. So yeah, like I said, we're going to be talking about a new tax reform. So these upcoming changes is significant and will impact everyone, regardless of whether you are online or offline. Even if you have a Nigerian account, you earn from Nigerian currency, and you are still living abroad, this will still affect you locally. So understanding them is very crucial for managing your finances effectively. So now your bank will report inflows. Like what we should know first of all is that this is arguably the most impactful change set to come into effect. It introduces a new level of scrutiny for your what financial transactions. Because if you just spend money before without keeping any records, just like that rapidly, no accounts, no nothing. So this has provided in a way um, for you to like check your finances and know where you spend your money, what money comes in and stuff like that. And one thing you should know about tax is there is there is there is nothing like taxing your income. Yeah, like the money you are making. It's only what taxable income, taxing your taxable income. So like not all the money you have is taxed. You get, it's only taxable money that is going to be taxed. And as a personal account, you're just going to be taxed based on inflows, like money coming into your account. Like the more because you use your money in your personal account and buy car, is not doesn't mean that you're going to be taxed. You get, like, you money going out of your account is not what's going to be taxed, or the money that stays in your account is not what's going to be taxed. Money coming into your account, like that's what will be taxed. So with this new tax reform, what it means is that because earlier in the traditional process, there's no like invent of this AI and stuff like that, stuff that could track all this. But now from 2026, as from January, there's going to be like very, very strict scrutiny of your financial transactions, like the money coming into your account, where does it come from, and stuff like that. So, and the money coming into your account, if it is not properly described and stuff like that, the FIRS don't care, right? They don't care. They don't even know how the money comes into your account. All they know is that any money that comes to your account, you're going to be taxed. Example, say your friend or your family member just send you 20 million into your personal account. They don't care whether that 20 million is sent you so that you pay for something and stuff like that. As far as it's not described, that money is going to be taxed like it's your money. You are just earning money. So that's just why you should focus on this and pay attention. So what does this new tax reform mean? Every licensed bank in Nigeria will soon be required to automatically report the total monthly money entering your account directly to the Federal Inland Revenue, which is the FIRS. So every money coming into your account would be accounted for now. Hence, from 2026, any money coming into your account will be seen, and they will know where this money that this money comes into your account, because banks are going to be reporting every record they have on all this inflows of money into your account. Okay, so you cannot hide it. Like trying to hide it is actually not going to happen here. Yeah, the best thing you should do is what, make peace with it and try to see how you can escape it, or probably not pay little uh, if that's the case, you get. So why does it matter? The FIRS won't necessarily know the source of your funds, but they will see the total amount. This creates two distinct scenarios. So like when money comes into your account, they don't really care. Probably maybe this money came from salary or this money came from someone. Like they don't care. All they know is that money comes into your account. So it's now left to you to make them know what happens with the money that comes into your account. So low and simple inflows um like simple, maybe someone sends you 10K, someone sends you 2K, all those like little money, despite the fact that there is a threshold for the amount that could be taxed, all these little transactions might likely be overlooked. So I would say if you are someone that just like you make money, like you don't really like make that much money in a month, even if it's, let's say it's 100,000 naira you make in a month, and your inflows are just simply like money for food, all those stuff, like little inflows, even if the money surpasses the threshold, FIRS might likely overlook your account, because of course they are not going to. We have over 200 million Nigerians in the country, you get, and there are a lot of people with accounts. They don't really care about like all these little inflows. Even at that though, you should know where your finances are to be at the safer side. But I don't really think they're going to be caring about like all these little inflows of money into your account. Like if you don't like make much money, you get. But of course, if you know you're going to be making money, and if you believe you're going to be, even if you're not making money now, you believe you're going to be making money in 2026, of course you want a better 2026 and stuff, then this is something you should really pay attention to. So now, high and complex inflows. FIRs will definitely investigate your financial patterns more closely. When you receive big sum of amounts, say 200K, 500K, 300K, like you get randomly, you are receiving all this large sum of accounts, then that account will definitely be in the attention of the FIRs. So now this new transparency highlights like why having a clear financial structure is now very, very important than ever. Like you can't just let money come into your account without knowing where it came from. You don't send money to people without describing it. Like you have to make sure you have full control of your finances. And when you do, you should have records of that to be at the safer side. So now, FRS now separates business money versus personal money. So I would strongly advise, if you are a business owner and you also like, normally, even myself, most of the times I receive money in my personal account that it's meant for business. You get, we don't really do that because Nigeria, of course, doesn't tax us. We don't really care about having a business account or stuff like that, unless we're opening a company, of course. So like Personal account now, personal money now, and business money are going to be two different things. You get FRS separates that. So if money is coming to you personally for personal stuff, or money is coming to your business money and stuff like that, it's separated now by FIRS. So now the FIRS is sharpening its focus on how income is categorized, especially when large sums of money flow into personal accounts. If money goes into a personal account in like large volume, FIRS assumes like maybe it might be a business income, or you probably owe tax on it. You get, so you cannot claim business, and it's your personal account, of course, so you cannot claim any business expense. They don't care whether you say, okay, you received the 20 million, but you use this 20 million to buy car, you use the 20 million to pay your school fees and stuff like that. That doesn't count when it comes to personal money, because they don't care about your expense. Of course, it's your personal money. You are going to do stuff that it affects you. You get, and remember, tax is only based on inflows, not money in your account or the money you used for your transactions and stuff like that. So you cannot claim any business expense if money is coming into your personal account. You get, trying to maybe reduce the tax to using that, it actually won't work. So this means that if you are earning income online, your personal bank account is no longer ideal place for you to what? For you to receive business funds. So for those of you that are doing business and are receiving the money from your account, or probably you are an affiliate marketer, you make sales, you receive money through your personal account, that is not advisable. Your dad sends you money, it's personal money, it comes to your personal account, you receive money from the money you make through sales in your personal account, you sold shoes, you sold clothes, and you receive the money, everything, like, it's gonna be rapid and clumsy. That is not really what you would want based on this new reform. So now, this new reform says that there is a what 7% PIT on what for small earnings, for small personal earnings. So like PIT means personal income tax, yeah, like that. So for every inflow of money coming into your account, there is going to be 7% rate that is going to be taxed off that money. So you feel like, okay, someone sent you money randomly without being described or stuff, like it comes into your account just like that. You just the normal transactions you normally do. 7% are taxed from that money. You get. So at the end of the year, probably FIRS comes to you and shows you a strong bill of money that are already accumulated. And because you've not been keeping record of your finances, you feel like, oh, where did this come from? And you definitely have to abide by it as a citizen of your country. Trust me, like it or not, like the government or not, like the policy or not, it's already like brought into place. So myself, I don't really like this, but it is what it is. So you just need to know about it and try to like find a way through it. Yeah. So for individuals, there is a simplified personal income tax rate for smaller declared incomes, offering a clearer path tax compliance. So for individuals in your personal account, like normal transactions coming to your personal account, you're going to be taxed 7% of that money. So that's a simplified rate. So if you declare personal income is less than like 25 million per year, your personal income tax rate is a simplified 7%. So like at the end of the year, if the personal income you make is less than 25%, you are likely going to be paying just 7% of that personal income that came into your account for the whole year. You get, tax is being taxed yearly, not monthly. You get. Now, the strategic advantage, this streamlined rate makes a well-structured salaries strategy particularly effective for managing your tax obligations. It provides predictability and what potential savings. So this new flat rate means that for many, strategizing how they declare their income can lead to a significant tax benefits. So not like before, we cannot just leave our accounts for money to just be coming in, no description, no nothing. We just send money. You just go to buy something in my, you just send money, no description, nothing. People send you money, no description, nothing. So that's going to be an issue. Yeah. So and for small company, tax issue, that was for personal income. Because personal income is just 7% that's going to be taxed if you earn 20, less than 25 million naira yearly. So it's just 7% that is going to be taxed. And if you're a salary earner, you earn 800,000 naira in a year, and you're still going to be, you earn more than 800,000 naira, you're going to be taxed. You get, as someone that makes money, like you're going to be taxed at 7%. So the FRS has implemented it tiered company tax structure based on turnover, so which is highly favorable for a small business owner or creator. So now, as a small business owner or creator or affiliate or some, like, as far as you now establish and you are now known as a business, you have a high tax advantage in a way that what any money you make uh in a year, like your profit, net profit in a year, if it's less than 25 million, then you're going to be taxed 0%. Yeah, you're not going to be taxed any money if you make less than 25 million naira turnover at the end of the year from your company. Yeah. Say you are a shoe seller, you sell shoes, you register your shoe selling brand as a company, then the net profit you make per year, if it's less than 25 million naira, you are going to be taxed 0%. Yeah. So yeah, and most creators fall under this as far as you earn little. And for those that earn 25 million to 100 million naira per year turnover, going to be taxed 20%. And for those that make more than like 100 million naira per year, you're going to be taxed 30%. This is for large structure. This structure means that what? If your business turnover is less than 25 million annually, you pay absolutely 0% company tax. That's a huge advantage for both. So now, you that you are just a small business owner and you earn your millions of naira, say 10 million naira a year, 50 million naira a year, if you have a company, then you have little to worry about tax because you're going to be paying 0% tax. Even if you earn more than the 25 million naira, it's net profit that is taxed now because it's a company. So expenses are going to be included. Say you use money from your company to pay for, maybe you pay salaries to yourself and stuff like that, or you use the money to buy a company car and stuff like that. So that you can include all those expenses at the end of the year as company expense, just to minimize the what tax rate. Say you earn more than that, you get, you know what I mean? So at the end of the year, the total money you make, that's the gross income, minus the expense. That's what gives what your net profit. And is that net profit that is taxable if it is above 25 million. You understand? So yeah, that's the advantage here. So now, how to legally minimize tax without an accountant? Because I believe accountants are going to be making a lot of money next year, simply because of one or two things that you can do yourself, but you feel like it's clumsy or it's boring. So they're going to be taking advantage of that. And yeah, that's not something you would not like. As far as you're here and you're going to stay to the end of this session, then you should know how to maximize everything yourself without anyone's help. So navigating the new tax landscape doesn't have to be complicated. There are three logical tools you can use to significantly reduce your tax burden, even without the professional help. So the first thing is what, of course, separate money correctly. So structuring how you receive money and manage your funds can cut your tax rate up to like 90% or even all like 0%. You get, you have to separate your business money from your uh, personal money, from your savings money, from your personal salary. That's what it means. You get, so your business revenue is in a corporate account. You get, or you have an LLC for your company. You get, so that LLC means your company is now a registered company and it's going to be like paying tax as a company. You get? So any money coming into that, as far as it's less than 25 million naira, is not going to be taxed. But here's the funny thing: whether you earn during tax policies, let's say this new tax reform, whether you are paying zero tax or not, you are still going to file. You get, at the end of the year, you are still going to file for 0%. Even if it's 0% tax, you're still going to file for that 0% tax. Let them know how you are not going to pay that how you are not going to pay that tax at all. You get, so your financial record is very key. Yeah, okay, you earn so much. Everything has to be recorded so that at the end of the year, when you're filing for 0% tax, they see every record and they know, like, you know what you're doing, of course, and no cause for suspicious act. You get. So yeah, uh like money that is in your savings or that you transfer like from like personal transfer from your one account to another. Let's say you transfer money from your GT bank to your OP, you get, that money is not actually going to be taxed, you get. So like it's out of the money that can be taxed, you get. If you make money like if you have money in your personal account in your OP and you transfer it to PANPay, that money is not going to be taxed as much as you transfer it. But it's still good for you to like add description that okay, it's personal transfer, you get. But that money is never going to be taxed, you get, as far as you know, you record everything you are doing, you get. So yeah, and now personal salary. Personal salary now, if you're receiving a salary, you maybe you work in the company or in a school or wherever, and you receive salaries at the end of the month, then that salary is actually going to be taxed. PIT is going to be taxed from that salary you get, based on the range. If you receive 67,000 naira per month, that accounts for the 800,000 naira mark. So if you receive anything more than that, that amount is going to be taxed, you get, because it's what is personal, is your personal income, you get. Salary is also a personal income as far as it comes into your personal account. And you know salaries comes into your personal account, so it's going to be taxed, you get. Unless there is this thing called pay, like pay as you earn. So some companies have that they, before paying you the salary, they remove the tax off the salary they are going to pay you. So you need not pay any tax if that is your case. Like if you're like the company you work for that pays you salary, they remove that pay as you earn. Or if, your financial institute, your school institute, your organization that you work on that pays you, if they remove those tax, that pay as you earn tax before paying you your salary, then that salary is actually not going to be taxed. Remember, it's only money coming into your account that is going to be taxed, not money like in your account already. So like any, if you have like 80 million now in your account, it's not going to be taxed yet, because like if that money entered in 26, it's not going to be taxed. It's already in your account, you get. So it's just inflows of money that is going to be taxed, you get. So that calls for no need for all this unnecessary panic and stuff. So the last thing is what, the big sum of money. Like that's what will call for like the most um most attention. Okay, say you are an affiliate marketer, you make millions of naira every week. That money comes into your account. You are a freelancer, probably you offer services online, you get paid in dollars, that huge amount of money comes into your account. So that's actually like that's where the problem is, because that money is actually going to be taxed. Imagine if you do a job of 10 million, someone sends you that money and that money is being taxed. Like if you calculate the amount, it's actually a very big amount, and compare it at the end of the year, that's actually crazy. So you really need to not take it for granted and pay full attention. So yeah, so how to navigate this if you are someone that makes big amount of money like this 20 million, 10 million, 5 million, like constant, like recurrently, you get. You need to have an LLC and open a holding operating company. So that way you have this holding company. When opening your LLC, it will be like served as a holding operating company where all these big amounts are being sent to. So if you offer the job, those big amounts are going to be sent to that account. Yes. So you could be using that holding account to like fund money into your another account, which is probably also an LLC, a business account too. You get. So and that money, that large sums of money are not never going to be that. Even if it's 100 million or 1 billion, that holding account is not going to be taxed. You get, because what, it is a holding, is it, you opened the LLC and it's stamped as a what, the company is stamped as a holding company, like a company that is holding the business, you get. So understand this holding company is mainly a company that just holds the money. You get, it's not a company that you do transactions, they send you simple money into your because of your business and stuff. No, it's mainly for the big sum of money that are coming into your account. It's now a holding company. Then you can have another account which is also a company account that could be for your the current business transactions that people are going to be sending money to, like currently. You get, so this is for those making that these large sums of money, like recurrently. So keep large sums of money out of your personal account. That's not even a question. Don't even try putting any big amount of money into your account actually. So now the second thing to use to like escape this tax is simple, which is tax is only uh like I said, it's not going to be taxed. It's not any money that is taxed, it's only taxable money that is taxed. You get, so there is money that comes into your account that cannot be taxed because it's not taxable. So now you have to, like, the strategy is just to reduce taxable income by what, converting your income into non-taxable categories with just simple descriptions. Okay. So smart financial planning involves like understanding which income categories are not like subject to tax in Nigeria. By correctly classifying your funds, you can legally minimize your taxable income. This is like for your even past for your I mean even like meaning your personal account and stuff. You get, even money coming into your personal account has to be taxable. You get, it's not income that is taxed, it's taxable income that is taxed. You get, so there is a money that will come into your account that will not be taxed. So what are those? The first thing is gifts. So if someone is sending you money and tax that money as gifts, that money is not going to be taxed. Or transfers, see your own account from one account. I already said this. Or transfers from family and friends, as far as the target as okay, this is a personal transfer. See, your dad sends you money. You are in school, you are a student, and your dad sends you money for upkeep and stuff. So it's going to be like okay, upkeep money. Yeah. So that money is not going to be taxed, of course. Yeah. And savings, the money that is already in your account, I already said this, not going to be taxed. Loans, okay, loans you give yourself is also not going to be taxed. So say you receive a money that is tagged as loan, you get, it's also not going to be taxed. Say you receive a large sum of money in your personal account that is like tagged as a loan, you get, it's not going to be taxed. You get, but it depends on, of course, where that money comes from. You get, if if you can't, like, if your, say your dad sends you 80 million and he tags it as loan, it's going to be very suspicious. Yeah, because it's a personal account going into a personal account, and with that large sum of money like loan is actually going to be very suspicious. So it has to be like from a corporate holding, something like your maybe your corporate account sending your personal account as loan. You get that when it's actually not going to be taxable. So loans are also not taxable. So capital contributions, yeah, funds injected into a business as capital are not treated as income. You get. So say you have 80 million now in your account, or 50 or 10 million. Let me use 10 million. Let's say you have 10 million now in your account, and in 2026, the new tax reform actually starts from January 1st. So in 2026, you sent that money into your business account, and you tag it as what, capital injection or money capital contribution for business or stuff like that, that money is not going to be taxed. Even if that money is 10 billion, you get, it's not going to be that, because what, that money is what is not the, that person you're sending the money is not his own. It means like you are just, it's just like a loan, or a capital contribution for that business. You get, so that means that business is going to pay that back. So if that's the case, then it is not taxable. That's why loans are not taxable. That is why billionaires and stuff like that, when they want to do stuff, they go to banks, they collect large sum of money. They use debt a lot to collect loans. So because that loans is not taxable. See Elon Musk, for example, when he was gonna buy Twitter, so he collected that money from a bank and paid for that what, for that Twitter, and it was not taxed. That's why you'll be surprised why billionaires are not taxed. This is one of the simple strategies they use. So now expense reimbursement, money received to cover legitimate business expense you are incurred is not taxed. Yeah. So in your business account, you have your money, you have say you make 50 million naira, for example. Yeah, it's above 25 million now, right? And we know anything above 25 million is taxed, even in your corporate account, right? Even in your business account, right? So, but you record your expenses, you record your transactions and stuff. You from that 50 million naira, maybe before the end of the year, you paid 25 million out of the account. Then you tag that 25 million as loan to director, probably, or bought a house for the company, or something like something that is actually an expense for your business. You get. So it doesn't matter whether that's what you actually use the money for. Say you sent that money for a car, to buy your own personal car from your corporate account. You use that 25 million naira. Then you tag it uh as okay, see business, or for tools, business tools. Say you have shoe materials that you buy in bulk and stuff like that. So you target like you bought those shoe materials with that 25 million naira. You get. That 25 million naira is not taxable because it's part of the expenses of your business. You get. So at the end of the year, that 50 million naira is going to be like your total income in your account, and they are going to be subtracting that 25 million naira expense of your business, because that expense means it's not part of the your profit. You get. So once that expense is being subtracted from the 50 million naira, it remains what, 25 million naira. And you know anything less than 25 million naira is not taxed. So you are not going to be taxed. You are just going to file for that 0% tax, and you are free of any tax. You get. So that's the strategy. Even if you make large sum of money, and you can be able to use some good expense, like, okay, you paid salary to, like, salaries you paid to yourself, or salary you paid to people, money you paid to, like, you get. So it's not going to be taxed, or director's withdrawal, like I said. So I hope you guys are understanding. If you're understanding, type yes in the comments, or type if you're understanding, type something in the comments so I will know that you are understanding. Am I clear? Am I clear? If I'm clear and you're understanding what I'm doing, then just say type yes in the comments. Type yes in the comments. All right. Yeah. So let's move on. So now the next thing you're going to be doing to avoid this tax is what, pay yourself small salary, not your full earnings. So that money you are getting into your corporate accounts that you are using for business, you are receiving transaction money that people use to buy stuff, it goes into your account. Uh, you just pay yourself a little amount of that money. Say for example, you earn 2 million, you get, instead of FIS express PIT on that 2 million, you get. So like instead of that, and you open it, you have a, if you earn like 2 million, sorry, if you earn like 2 million naira, you get, and it comes into your personal account, that whole 2 million naira is going to be taxed. And when you calculate that money, it's not really a small money, you get, especially when it accumulates, you get. So, but when you have a corporate account, say you have an LLC, you, that 2 million is not going to be taxed because it's less than the 25 million naira threshold. And instead of how to use your money now, you just be like paying yourself a little amount of the your business money monthly. So that you'll be more accountable for your finances. You pay yourself like 200k from that 2 million. Yeah. So is that 200k now that comes into your account that will be taxed off for PIT? So that 200k that comes into your account will be taxed, the 7% will be taxed of that personal money. You get. So it's wise because instead of taxing 2 million, that 200k you paid yourself is the only thing taxed, and it's going to be way less. You get. Going to be way less. So let's apply everything now to both categories. Say for example, category A now, you earn 200,000 naira to 500,000 naira monthly, and you have 2 million to 10 million saved. And and you want to like minimize your tax legally without any paying for any accountant and stuff like that. What you should do now is what, you don't actually need to register an LLC, because you don't need to register the company if you earn this much, because from this amount of money you make, it's actually might likely be overlooked actually. Gets so this like is low because they're not going to waste their time like trying to catch you because of this little of like it's just little increase in the like money and stuff that is going to be, even if it's taxable money of course, but they're not going to waste their time of this little income you get. But still advisably you still get an LLC, and to be on the safer side, keep records of your financial transaction, even if you make this low of amount of money you get. So that's not really um that's not really going to be a big deal. It's rather to be safe than prevention better than cure, something like that. So um collect all your money into one account, keep it simple at this, and categorize income monthly, salary, gifts, saving, digital sales, and stuff like that, and pay on only the business portion of their income. So, like once your money is being categorized, if you earn like this much 200 to 500k, and from this 200k there is gifts, there is loans, there is sell like you get savings and stuff like that, all that is going to be removed as not taxable money. So the money is going to be little. So even if it's taxable, it's going to be very, very little. So that's why they are not going to be paying much attention to this. The only money that is taxed is money that is taxable income, not income. You get. So when you describe any payment you are making or any payment you are receiving, you ask people to like, okay, describe this payment you are making to me as gifts or as any of the safer methods that are not taxable, that money is free of tax. But of course, it has a limit. You can't be making large sums of money and you'll be claiming that you are receiving gifts. Like it's not only you that have people around you. Yeah, so you just have to act smart. Only when you make this little amount of money would you be able to use this simple personal tricks as gifts and the likes you get. So expected monthly tax, if you feel like 350k per month in business, your income tax is going to be 7%. Right? And 7% of that money is 24,500 naira. You get. So like if you calculate it in a year, that is actually a lot of money. But realistically, this wouldn't actually be taxed. Why? Because in that 350,000 naira, you could some of the money you could be taxed as savings, transfers, and stuff like that. So at the end of the day, that money will account for very little amount that is taxable, even if it's taxable. You get. So you have little to worry about your tax problem and stuff. But remember, as a citizen of a country, you still have to file. Even if it's 0%, even if you are not paying tax, you still have to keep a record of your finances because there should be a reason for why you are not paying the tax. You get, say for example, you use all these trees of gifts and the likes. You get, so your money is free of tax. Doesn't mean that you will not be you just be enjoying your life. Like you have to account for all those money coming to your account so that at the end of the year you file that record as what you, and you clear yourself that you are free of tax 0%. So even if it's 0%, you still have to file. So that's why keeping financial records is very, very important. Any receipts, any stuff like that you get is very, very important. So yeah. The category B is for those that are making like 2 million per month, like have 80 million saved, wants to minimize their tax legally. So if you're making large sums of money, you are actually going to be, that's when the problem is, because you are going to be taxed off the money you get. But there are ways you escape that. So ITAX assessment, FRS assume that 80 million monthly inflows are taxable income, leading towards significant expected liabilities. So if there's large sums of money coming to your corporate account or personal account, FRS will definitely tax it. They will not care that okay, you say gifts or whatever you get. So intense FRS scrutiny. FRS are going to be focusing on your account. So whether it's gifts or not, they are going to pay attention and they are going to get to the bottom of it. You get. So you can't be earning that large sums of money and be expecting that because people are tagging it as gifts, then you are safe. Like it's not smart. You get. You have to be smarter than that. So immediate requests for audit and like demands for source of funds, explanation due to large undeclared inflows. If you receive that some large sums of money that are always start at gifts, loans, blah blah blah, and they are going to be detecting your account because your account is one of the account of interest, because they are really focusing on making money off people that are making money, right? So like be from business. So they are going to like detect and they'll be like, oh, this is suspicious, and they might freeze your account or block the transactions till you have to come and clarify yourself. And when you go to clarify yourself, that's where the problem is, because they're going to see that really this money is business money and business income coming into your account, but you keep tagging it as gifts and stuff. So having a LLC is very, very important. So the legal solution, the first thing you should do is go and set up a company, have an LLC. What that means is register your business as a company, as an LLC or LTD. Yeah, LLC most preferably. So like not for branding, not for business, but what just for tax protection. Because you're not doing this for this branding or anything. You are doing this for to avoid tax. So if you know you make less than 25 million naira in a month, you have an LLC, every money comes into your account. You just need to keep records, and at the end of the day, 5 or 0%. You get as easy as that. You don't need to worry about people tagging it the money as gift, people tagging the money as meanwhile, like it's your personal account. You get it's kind of a very big headache. You get so this is the right way to go about it if you know you make large sums of money. So like move activities from personal account to company account. That's a no-brainer, like I said. Online sales, dollar income. Say you are a YouTuber and it's like that's not even a question. Yet that's not even a question because they are going to tax the hell out of you if you don't do that. So if you know that you are into any business, you sell things, you sell goods, services online or even offline, just make sure that you register as an LLC, right? So, and at the end of the month, you can just be paying yourself a little amount, yeah, of the money you make in a month. Say you make 2 million naira in a month, you can just pay yourself 300,000 naira. Or so that money you pay yourself from that account, that corporate account, is going to be taxed as PIT income, like a salary, right? So, but it's way less than what it's way less than leaving your money, all that money coming into your account and all taxed as personal income. You get so yeah, if your salary is 100K, they're going to be taxing like 7,000 naira. That's 7%, right? 150,000 naira. That's like 10. So like the money, if you feel like it's nothing, but at the end of the year when it is compiled, it's going to be a large sum of money. You get so the remaining money stays tax free inside the company. So any money that is in your company, as far as it's that still less than 25 million naira, it's tax free. It's not going to be taxed. Only that salary you pay yourself that is going to be what that is going to be taxed. You get. Or if you pay yourself even as loans, it's still not going to be taxed. So see, that's like a lot of strategies when you have an LLC and a company. You get. So yeah, you can decide to pay yourself. It's coming into your account, but you pay yourself as a loan. So that money is not going to be taxed, right? So strategies everywhere. So now step three is what the big one. Like if you make a lot of money, like 80 million, like personal account is not even like I said, it's even out of the question. You get don't let that money into your personal account. The two possible ways to like secure your money or to make your money tax free is what capital injection. Seeing that money, defining that money as the money for your capital for the capital of your company. You get so when you are sending that money, when they are sending that money to your account, corporate account, they say okay, capital for business, right? Or capital for running the company, like you get, or loan to a company. You get option B like director loan. You get so it means like okay, it's a director of the company that loaned the company that large sum of money for smooth running and stuff like that. Okay, so that money is actually not even going to be taxed in the first place, right? Not going to be taxed. So, and the best part is what you can withdraw that same 80 million later in small bits as director drawing, reimbursement, loan repayment, expense payment. So, when you're about to remove that 80 million, say you want to buy stuff with your 80 million, you just remove like say 20 million, you tag it as what loan repayment. You get so that money is only going to be taxed even if it goes into your personal account. You get so that's just the strategy or reimbursement. You tag it as reimbursement or expense payment. You get it's all 0% non-taxable. It's non-taxable. All right. So as far as the money of your company, the turnover, what I already explained turnover. Turnover means when the gross income of your gross income, the expense is subtracted from the gross income. The net profit is what? If the net profit is less than 25 million, that's the turnover, like it's not going to be taxed. You get. So, and there you are smart. There is a way you use that expense to like make sure that what you are not going to be taxed. Even if you make like 100 million naira before, because it's tax is actually yearly. So, like before, let's say in December or in November, you can just go and buy something of 100 million with the 100 million naira and be tagging the money as tag some part of the money as reimbursement, loan repayment, purchase of company assets, purchase of company tools, like that. So all that you now include it as expense, and it will finish the money. So the money that will be left is will not be taxed. So you just file for 0% tax. So that's the smart way. It's very important you have an LLC. All right. So yeah, without the structure, you'll be paying for any amount that comes to your account. If that amount is large sum, they already know that amount is not it or it's not like it's meant for a business. You get so, and it comes recurring. You can't be using your personal account receiving a lot of money and you telling people that you give loan every time. You get so it's not a strategy that is sustainable to be using all the time. You get so having an LLC is actually of the better way. So there are a lot of questions that people used to ask, like if will your savings be taxed? Any money that is in your account is not going to be taxed. If you have any question about this tax, you can ask in the description, and I'm going to be checking it and I'll answer your question. You get. So the money that comes into your account, like the money that is already in your account as savings, is not taxed. You get. So already any money you have now in your account, even if it's entered next year, that money is not going to be taxed to. It's safe. You understand? It's only when you send that money to someone is when that someone is going to be taxed off that money if that money is not properly described. You get. So, but your money in your account now is not going to be taxed. So just calm down. It's only inflows of money that are taxed. Money coming into your account is what is being taxed, and the money that is being that is coming into your account, the money that is what meant for business, money that like you earn like a salary or something that you make money off, like you sell things and make money off, not gifts, loans, and the likes. You get. So, but if you really make money off selling shoes, selling stuff like that, and you try to be tell your customers to be sending you money as gifts, it's not gonna be working. It's not a sustainable model, like I said, because it's going to be suspicious. People can't be sending you money all the time and it will be gifts or loans all the time. It's not going to work. The best thing is what? Register as an LLC, use that LLC to open a corporate account, receive all those money into your account, remove expense at the end of the year. That's it. File for 0% tax. As simple as that. So money in your account, savings, will not be taxed. So risks from undocumented inflows. Like like I said, let me make this clear again. From next year, January, any money coming into your account, you will have to report it. Like find a way to record it. You get. Okay, I'm going to show you a way to record your financial structure from next year. You get. Record everything, even if it's gift, even if it's loan. I feel like okay, I'm not going. That money is not going to be taxed. Yes, it's not going to be taxed, but they don't know. FRS don't know that. It's you that is going to explain yourself now when they come, or probably you go yourself, you try to file for your tax. You feel okay, this money is for gift, this money is for this. Because of what? You are already recording everything. You get. That's when you file for 0% tax. You get. Doesn't mean that because your money is not taxable, so you will not file or you not keep records. It's going to be a big problem for you. Keep records of any transaction you do and keep the receipts with you. Ask people to describe money well and keep those records so that you file for 0% tax if it's 0%. Get. So yeah, will your 500K salary or 500 be taxed if it goes into your personal account? Definitely. If you earn salary in your account, as in the moment that salary is coming into your account, it is already taxed. Doesn't mean that when that money comes into your account, they will remove the money. No, it's not. That's not how it works. You get. But the records are there. You get. At the end of the year, your money is all that money coming to your account is going to be taxed based off that percentage. You get. So your personal account for receiving salary is not a very good idea. But like for people like government workers and stuff like that, you have to use your personal account to and stuff like that. Like most of those organizations already remove the tax before paying you. So like they are not going to be taxing that money. But if it's companies that don't really remove that pay as you earn, you get, then that your money, personal income is going to be taxed. Even at that, you are still going to be the one to explain that your money is already being taxed. So you just have to keep financial records, whether you like it or not, to be at the safer side. So yeah. Are you guys with me? All right, cool. If you are with me, just say something. Uh, uh, Type yes in the comments, so I'm that you are cool. You are cool. So like money that are legally not taxable, let me repeat it again. Transfers you make to yourself from one account to another. If you send your money from PanPay to OPay, from PayPay to Kuda, from Kuda to like, it's not going to be taxed. You get, but you still have to tag it as personal transfers and record it. Like keep records. You get, tag it as personal transfer and record it in a sheet. You get, gifts from families or friends are not going to be taxed. You get, that money is not going when your family or friends send you gifts, it's not going to be taxed. But you still have to keep record of that. Okay, it's gifts. You keep that record, write it somewhere in a Google sheet or somewhere. You get, you because you still have to file for 0% tax, even if it's free of tax. That's why I'm repeating this. Having your financial structure is very important, whether the money is taxable or not, because it's you now that you're going to use that filing to explain why the money is not taxable. It's because it's gifts, it's because it's this, you get. So money you are saving in your accounts, your money saved in your account is not going to be taxed. Reimbursement, money like you are being paid, you like say you send somebody money, it's refunding you the money, you get. So if he just the description just need like a refund, you get, that money is not going to be taxed because it's reimbursement, it's refund money, you get. So yeah, loans you give yourself or receive is not going to be taxed. Yes. Like I already made that clear. Loans are not taxed. That's why. So for this, if you can, those of you that are doing that adashi stuff and stuff like that, you are receiving. So that money you receive from that contributions you are doing is not going to be taxed because it's going to be taxed as loan. You get, so it's not going to be taxed. Yeah. So old money staying in the account also not going to be taxed. Withdrawal and deposit of already taxed money not going to be taxed. Say for example, you earn your salary is 5 million, and that 5 million comes into your bank account, and that 5 million is being taxed already. You get. So because you remove from that 5 million and buy something, say you remove that from that 5 million and buy something, you remove from that 5 million, withdraw money from that 5 million, it is not going to be that transaction you're doing off that money is not going to be taxed. You understand? So that money has already they already taxed money once. So say 5 million comes into your personal account, it has been taxed as PIT has been removed from that money. Yeah, any transaction you do with that money again is not going to be taxed. But of course, the person you are sending that money to is going to be taxed if the description is not company accounts too. You understand? For your personally, that money, the transactions you do, you deposit, you remove money from off that money that has already been taxed is not going to be taxed. So FRS can legally tax gifts, cannot legally tax gifts or transfers. They are protected under the Nigerian tax law. You get. So yeah, will paying rent from your personal account be taxed? No, you will not be taxed for paying rent from your personal account. So rent is a personal expense, not income. You get. Like I already said, uh, in your personal account, it's only income that is going to be taxed. Like it's only money coming into your account that is tax inflows. So even if you spend money for something, it's not going to be taxed. It's that person that you give the money to. If it's going into his personal account, then it will be taxed in his own. Like, yeah, you understand me? You get. So yeah, tax applies only to money entering your account, not money going out of your account. Get that straight. Tax applies to only money coming into your personal account, not money going out of your account. You get. If it's a business account, you have an LLC and stuff, tax apply only to what net profit at the end of the year. You get. Even no matter how much coming into your account is not taxed, it's only the net profit. When the income, the tax, the expense is being subtracted from the what net gross income, then the net profit is the one that is going to be taxed. You get? And you can't claim business expense in your personal account. You can't claim that, okay, I say you receive 5 million salary. So, but from that 5 million salary, I paid so thing, I buy car, I buy house, I buy stuff like that. You get? So that money is not going to be taxed. No, it doesn't work that way because it's your personal money. You get? So it's your personal account. That's why it's very bad idea for you to use your personal accounts to hold money and stuff like that. Thinking because you buy stuff, that expense is going to be included as no, it's only in company accounts. So why transaction description can you use to avoid being taxed? Payment received, like business, sales, project and stuff. So when money is being sent to you, like ask people sending you small money, like someone sending you 100K for something, you get, it's not business related. You get, ask them to be tagging it as gift, support, allowance, contribution, refund, loan repayment. Any of these description, gift, or support, or upkeep, or allowance, or contribution, or refund, or loan repayment. Why? So that when that money comes in your account, you go to your record sheet and put it there. Date, so date, money received 100,000 naira as gift from so person. That's it. You've recorded it. You get, and that money is safe. Remember, whether that money is gift, support, or allowance, you still have to file for 0% tax. So yeah. So when you send people money, also be tagging it as gift. If the money is for them, of course, you're just sending money to help them. Maybe you're sending your mom money, you're sending your brother money. Be tagging it as gift allowance so that it will not be taxed off them. You get. So let's normalize using descriptions for one another, please. So yeah. So when you move your money from your own account, I already told you guys it's not going to be taxed. Money from your account to one account to another is not going to be taxed, but you are still going to be recording it and be tagging it as writing in the description as own transfer, own account transfer, or savings transfer, or personal funds, or money movement, or self transfer. You are still going to be describing any transaction you do and be recording it, despite the fact that what? Despite the fact that it is not taxable. I hope you get. So when someone repays you, ask them to tag it as refund, reimbursement, or loan repayment. Likewise, when you do the same for others, tag it as that so that that money will not be taxed, but they are still going to record that money as and file for 0% tax at the end of the year. So avoid these narrations at all costs. These are the narrations you should avoid. Payment received, services, business, sales, client payment, income, professional services. Don't use all these descriptions when you are making payments to someone, or ask them not to use these descriptions. Payment received, services, business, sales, and client payment and the likes. You get. So legal tax minimization for crypto P2P. Okay, yeah, this is a very important part. People used to ask like, okay, crypto traders, crypto vendors are doing P2P and stuff like that. So like Nigeria is crucial for these P2P vendors because what? There are three key tools you should that guide that and strategy you should know. Crypto itself is not taxed. Yet. I'm not going to go deep for those that don't understand crypto, but for those of you that know crypto here, when you have a crypto like Bitcoin, Solana, and the like, it is not taxed in itself. But the fiat transaction, like when you let's say you want to put money in your Bybit, you send money like Naira, you convert it to fiat and stuff like that through P2P. It is that transaction, that money is the one that is taxed. You get that fiat from fiat to Naira is the one that is taxed. But crypto in itself, because you send money, send someone Bitcoin, send someone Solana, is not going to be taxed. Never. No one can ever tax crypto. That's the beauty of it. It's only fiat inflow you get that is going to be taxed. You understand? Fiat, like I said, transaction of Naira to USDT. That USDT is what we mean by fiat. You get. So volume, not crypto triggers or triggers flags. You get. So like high transactions, say you are using your personal account to trade and you are like using P2P to say like 20 M, using your personal account to like sending that money into your P2P account like that, you get. it's going to bring suspicion because your account is going to be of particular concern. Yeah. So they're going to be like paying attention to your accounts, and that transaction, you know that of course this is a business transaction happening. So tax needs to be paid. You get. So before you know, they might flag your account and ask you to come and explain what is going on and stuff like that. And your money will definitely be taxed. You get. So you, even if you are using P2P, if you are doing big transactions that involves P2P, then you have to open an LLC for that particular account. You get, so that it will be it will be an authorized legal corporate account that you are using for your P2P transactions. So legal structure offers protection. Yeah, when you have an account that is legally registered, then you don't have no cause to worry. You get. So the bulletproof legal structure is simple. Like I said, first thing you need to do is just to open an LLC. Opening an LLC or corporate account, that's the first thing you should do. You get. So you can open an LLC yourself. You don't need anyone to do it for you. There's going to be a document I'm going to be dropping for you guys that you can use to open that account. But of course, if you don't want to undergo that stress, then I have my team that can help you create an LLC, and for just 60,000 naira without having to undergo all those stress, and your account will be up and running. So, but when registering for your LLC, there are don't use certain keywords like digital services or financial services or payment solution or fintech operations or blah. Yet, don't use that this as your like your business tag. Don't tag your business as any of this. You get any of this listed about digital services or financial services, payment solutions, services, fintech operations, e-commerce or merchant services. You get, register your company with the Corporate Affairs Commission using safer keywords to avoid what red flags. You get. So like to open a corporate account, after you've registered your company, you now use that CAC, that LLC CAC to open what a corporate account with Money Point or any bank. You get. So that's what you now be receiving money from that Money Point account that will not be taxed. Any money that goes into your corporate account is not going to be taxed. It's your net profit that is taxed when expenses is removed. So even if your money is 100 million you make in the year and you remove expenses of 80 million, it's still less than 25 million. So it's not going to be taxed. You understand? So that was just it. So yeah, legal tax minimization for crypto P2P vendors. If you are a vendor of crypto P2P, then treat crypto sales as inventory trading. You get. This is what you should use to register your LLC, and what you are going to be safe from this taxation. You only pay minimal tax on net profit. Say for example, you trade P2P for 50 million naira in that year, and the money you buy is what 50 million. The money you earn, the money you buy is 40 million. The money you earn is 50 million. So the only profit there is what 10 million. So it's that 10 million that is going to be taxed, not that whole money that you receive. The profit you earn from the transactions you do from that P2P is the money that is going to be taxed. You understand? So yeah. So once you have a legal account, an LLC, and you open a private account, when you want to use your money, you just pay yourself salary. Say you pay yourself money as director salary or dividends or loan to director and stuff like that. So that's what it will be included as an expense in the company and reduce the taxable income. So withdraw your profit legally without extra tax. Of course, these are the ways you do it: director salary, dividends, director loan repayments, or payment expense reimbursement. All this money are going to reduce the taxable income. You get money in your company account. Let me re-explain again. Money in your company account is not going to be taxed. It is your net profit that is going to be taxed. So if you make 1 billion and your expenses for your business is 900 billion, 990 million, like you get, the only expenses there is just after the expenses is removed, the income, the profit you make is just what 2 million, less than 25 million. It's still going to be 0% tax. You're just going to file for it. explain how your expenses went, and that's just it. 0% tax. You get? What if it's your personal account? They don't care what you use the money for. As far as the money is coming into your account, you're going to be taxed if it is not described well. And if it's business money, no matter how you describe it, it's still going to be detected. You get? Because business money sent into your account 10 million, 20 million, 200,000, 100,000 recurringly cannot be tagged as gifts because you cannot be gifted all the time like that. You get? It's going to be dragging suspicious acts because that money is generating, that personal account is receiving a lot of big money and it's being tagged as gifts and stuff. You get? So we don't want that. Open an LLC, open a corporate account so that what you'll be safe from that. So like I said, these are the recurring questions that people used to ask. Forex traders having a transaction. Okay, for forex traders doing these transactions, also you also need an LLC. Register your company, your firm, whatever, as an LLC, so that what your money would not be taxed as personal income. You get? So, but when you are paying yourself salary, say you make a lot of money in a month, but you pay yourself off that money as salary. That salary coming into your personal account is the salary that is going to be taxed. Yet, if you make 2 million naira, for example, in your company, and you remove 200k and pay yourself to your personal account, when that 200k comes to your personal account, that 200k is going to be taxed, unless that money is being tagged as what, something not salary. Let's say that money is being tagged as loan repayment, loan reimbursement, or buying something for the company. Meanwhile, you are sending the money for yourself, or you are tagging it as you are buying money for something. Buying a gadget for your. Say you are a content creator. You can say you bought a camera worth 25 million naira. Yeah, that camera just to upgrade your business because you register yourself as a content creator. You get? So like you get my point. So that money is going to be removed as expense. It's not going to be taxed. It's not going to be taxed from the company. Also not going to be taxed from your personal account. You get? So that's just the strategy you're going to be using. So having an LLC and a corporate account is a no-brainer. So now, is personal income tax net? Is personal income tax net or gross? Personal income tax is calculated based on your taxable income. You get? All your it's not all your money coming into your personal account that is going to be taxed. It's the money that is taxable that is going to be taxed. And the money that is taxable is money that does not include all those gifts, loans, and the likes, the descriptions I listed earlier. Get? So after removing all those things, if there is still money, then that's when the money is taxable. You understand, about? So yeah, if you know you're making this much, like not really much, you don't need to really worry about tax. You get? Because you're not really going to be even if there is tax. Say for example, you make say the lowest amount is 800k per year, right? So if you make like 1 million naira per year, like you are still not, even if like ideally there is tax added, but you're not going to worry about coming to like, even if you don't pay the tax, no one is going to like bother you. You understand? If you make that small amount of money, but if you believe you are going to be making big money, even if you're not making money at the moment, you believe you're not going to be making big money in the long run, then there's still going to be a problem. Okay, so you need to register yourself as a company and stuff like that. And even if you are not going to pay tax, you are still going to file for 0% tax. So you are going to be you need to be recording your financial structure, your transactions. You get? That's a very, very important part. So yeah, how can a civil servant legally minimize tax? Actually, by contributing to pension, retirement funds, claim legitimate non-taxable benefits, supplement his side business and stuff like that as an LLC. So yeah, if you are earning a salary and that salary is a taxable money and you are using that money for business, yet that salary is coming to you and you are using that money as capital injection, for example, that salary is still not going to be taxed because you are using that salary as capital injection. That salary goes to your corporate account before it comes to your personal account. You understand? So yeah. So yeah, tax is not based on when for crypto traders, for crypto vendors, personal income tax is based on your actual profit. Like I said, even if you are using your personal account for trading P2P, right? Your actual profit is the one that is going to be taxed. Say for example, you are trading P2P with your account, and in a month, in the year, you traded like 22 million naira worth of P2P. You understand? And from that 22 million naira, you bought you bought for like 20 million and from for like 11 million, and you sold for like you sold for like 11 million or 12 million. You sold for like 12 million, and you bought for like what, 10 million. That means what? That's 2 million is the only profit you have, you get, after the transaction, because you buy for so and you sold for so. So this the one you sold is 12 million. Of that in 2 million transaction, you sold 12 million, and um you bought 10 million. You sold 12 million, you bought 10 million. That means it's only 2 million that is your profit. So is that 2 million that is going to be taxed, not the 22 million naira, because you did transaction of what, 22 million naira. You understand? So it's taxable money that is only going to be taxed. And the profit, when it comes to crypto vendor P2P transactions, is the profit that is taxed. It's not fair, of course, for them to be taxing you based off your transactions, because your transaction is 50 million. Meanwhile, from that 50 million naira, you bought for 49 million and you just sold for 50 million. You see, it's just 1 million profit. So they can't be taxing you off that large sum of money when you did not make that profit. So it's that profit on top that is going to be taxed. And of course, they are going to be seeing every transaction. Stop saying you can't hide. That's just it. Remove that mentality from your head. You can't hide from tax. You just need to what? Keep a very good credit score, keep a very good financial record and structure, and file for 0% tax uh, using smarter ways. That's just it. So there is this smart tracker, yeah, smart tracker template that you can use to be recording your transactions, it for your company or for your personal. Because like I said, whether you are paying PIT, personal income tax, or company income tax, CIT, you are still going to file for it. Even if it's 0%, you are still going to file for 0% tax. Or else FIS can come to you and tell you that you are owing 10% tax. You keep no records. You have no, even if in the court of law, you cannot appeal for anything. You are definitely going to pay that, or you go to jail, because what, you can go to prison for lack of tax compliance. You get, so stop thinking that you can hide from this. You just have to be accountable and be responsible and be recording your transactions. You get, be recording any money coming into your account. You record it. You get, put everything and record everything. You understand? Say for example, you earn from YouTube. Okay, YouTube ad revenue. You put, like, you can see dates. You put the date, source, description, currency, amount, exchange rate, and stuff like that. So this smart tax collector, it helps you to automatically be inserting all these numbers, calculating all these numbers, and be telling you if you are tax free or not. That's the purpose of this smart tax collector. Yeah, smart tax tracker. You get. So but smart tax tracker is going for like 10,500 naira. I'm not even the one selling it. I just bought it from someone um that is selling it. You get, and I find it very, very, very advantageous, and it's gonna be helping a lot. So there's the link in the description. If you want to buy it, you can go through that link and purchase the smart tracker. What you're going to be doing is what? If you earn say 200K comes into your account, you record it. Okay, date, so date. Um, the date automatically inserts itself once you start inserting in your the tracker. You understand? This so date, the amount, so amount. Just put the amount there. You're going to, and okay, from where, the source and stuff like that. That's what you record, as you can see here. Because the source of the money is from YouTube, is from gift, is from, even if it's from gift, even if it's from loan, you still have to record. Like I told you guys, you still have to file for 0% tax. You understand? So do not forget. So you need this fast smart tax tracker. Or if you don't need this smart tax tracker, of course this smart tax tracker is going to be lessening the work for you, yeah, because it's an automatic. No, you are not going to be the one to be doing the calculations yourself and stuff like that. It's a sheet that is going to be like automatically inserting all the variables you need. You just need to like write the transaction and stuff like that. It's going to calculate everything and well tell you whether you are tax free or not. You get, instead of recording this on a book and stuff and it gets clumsy and it gets frustrated and the like, it's better you have this smart tax tracker. You get, easy. So say for example, your business income is just 450,000 naira, right? And your total business expense, say you are a content creator and you spend 170,000 naira on camera. So your business expense is what? 170,000 naira, right? So, and you paid a salary to yourself of 100,000 naira from your dial account, corporate account. So that's what, like 270,000 naira, right? So now your net profit now is what? This 450,000 naira income that you earn minus the money you buy camera and the money you pay yourself. That's what? 180,000 naira left. So it is this 180,000 naira now that will be taxed. You understand? If it is taxable. But of course, 180,000 naira in a company account is less than 25 million naira threshold that could be taxed, that is taxable, because the net profit is less than 25 million naira. So that means what? The taxable company profit is zero, and what? The company tax rate is zero. Get? But you still have to file for what? 0% tax for your company at the end of the year. So you have to keep the record intact. But for that your 100,000 naira that you pay yourself as salary is going to be taxed PIT, 7% PIT, as what? Personal income tax. So at the end of the day, you're going to be paying just 7,000 naira if you pay yourself salary. You understand? And you can decide not to pay yourself salary at all. Yet just be paying for expenses, or even if you paid money, you'll be using it as expensive. You can decide to send a business person that money into his account, or you send a friend that money from your account, from your business account. You send that money as maybe loan repayment, and that your friend send you that money as gift. That's it. You are free of tax. You just need to be acting smart. You get, because it's not any money that is taxed, it's just money that is taxable that is taxed. So you just need to be smart. And from this class, these sessions, you already know the money that is taxed, the money that is not taxed. You know how to maneuver your way and be tax free. Get, especially for those of you that are making money off online, get businesses, affiliate marketing, YouTube and the like, especially YouTube. Like you just need to be very, very, very smart to get to escape all this tax. Because if not, imagine as a Nigerian, you are making money, you're trying to escape poverty, and the government are collecting money from you. Imagine you're making 2 million naira every month and they are collecting 240,000 naira. Ah, so if you compile that 240,000 naira at the end of the year, 240,000 naira times 12, how much is that? That's crazy. Get, for you to be giving a government that is not even giving you anything. So you just need to have it, act smart, play. You don't need to do anything illegal. Get, play smart and be legal, and thus you escape it. As simple as that. So yeah, and for someone that is doing POS or running a bet company, you get, like, you're going to be receiving money like that, like inflow, outflow. You get, of course, you need to register as an LLC. That's a no-brainer, and you need to record all these transactions. Recording all these transactions in books, like the way POS people do, is very, very frustrating, and it's going to get very clumsy. You get, for you to file, because even if you are filing for a tax, it's going to be online. You are filing. You get, unless you want to go to you're not be going to the FIRS office. You don't really need to go to the FIRS office before you file. You can file online. You just need to go to taxpro.com and taxpro. Yeah, you just put your financial record. This Google sheet in the smart tax tracker. You download the PDF at the end of the year. So that record sheet is the one you are going to file. That's what we mean by filing. Filing is keeping track of your financial records. Okay, you earn so this, the expense is this, the source of the money is this, so the money is not taxed, it's 0% tax. So when you place that, you are actually free of, you are filing for 0% tax and you are free of tax. No one is going to come to you. Even if, say, you're going to be taxed and they come with a large sum of money, because they're going to be scamming a lot of people next year. Oh God. So like they're going to be coming with this large sum of money, because FIRS people also have way to chop money to eat food. So like they'll come into like, okay, you're going to be taxed 10 million naira. Why? You start explaining your expenses and stuff like that. But if you have no financial record, damn, like you have nothing to prove, you have nothing to see. You are just going to pay whatever they tell you that is your like tax money. You understand? That's not something you don't really want. So having an LLC is very, very important to open a corporate account, operate as a business, and what make sure you buy this smart tax tracker to be recording and keeping record of every financial transactions coming, transaction inflows coming into your account and stuff like that, or your company, or both your company and personal transactions. So yeah, um, and do not, okay. What if someone mistakenly pays me money and I refund them? Will the government tax that income, or can I refund it as expense? You can and you should record it as a refund. Yeah, you are not going to be taxed. If someone mistakenly send you money, or if someone send you money, you can refund that money as tax. So that means your friend can send you money. If that your friend send you money, you can refund that money, and you can resend him back that money and tag it as refund. So that money will not be taxed. You get so like even though the money is being recorded as an inflow into your account, because you refunded that money, is not going to be taxed, but you have to record it now. Go to your smart tax tracker and write the amount of money, the source, and what put it as a refund or reimbursement. You get not revenue. Use bank narration like refund. You get mistaken payment and stuff like that. So if documented properly, bank message plus your record, account recording is very crucial. So whenever FIRS should treat that as taxable income, you have a way to defend yourself. Just show your bank record, you show the bank receipt. Make sure you keep track intact of every receipt of your transactions. You get the screenshot of the receipt. You get. So yeah, your bank statement, you can show them the transactions and stuff like that, what you've recorded and why it is not going to be, they cannot tax you based on that money. You get. If you don't keep record, you are on your own. So like for freelancers using platforms like GPay that only allow personal bank accounts linked, what's the point of having an LLC? So now for like, that's for us YouTubers. If you are a YouTuber, you know that linking your account to GPay or any of these accounts, you need your personal account. You can't you can't use your company account to like link your account. So what you do to make it legitimate is what? First of all, you create a company. You have to create you still have to have an LLC account. You get, register your business, and where possible, like encourage some clients to pay you that. If the payment is manual, you can encourage, let's say for the sponsorship deal, for those of us having sponsorship deals, yet they come to you, they just like pay you into your company account instead of giving them your personal account, and tell them why, because it's going to be taxed and stuff like that. You get. So, and you have to be keeping track of that record in your smart tax calculator. You get everything, and that money that is being sent into your account, you could personal account, you could push that money to your what business account and tag that money as what uh, as capital injection, or money for growing business, or money for like, you get. So you pull down, or you move that money like from your personal account to your in company account via capital injection or loans, tagging it as capital injection or loans. You understand? Or for future business funding, or for growing business access, so that that money would not be taxed. You get. So when this FIS comes to you and they say you are receiving so dollars from YouTube, and it comes into your account, you get. Sorry, they don't know the source. Of course, they never know the source. They say the bank statement only shows, okay, you receive money. Okay, you receive money from so person. You receive so money, amount of money. You get. So you can decide to explain, oh, this money came into my account. It's for capital injection. You get, like, because your records are already there and you already tagged that money as a money for capital injection. Yes, so you could easily avoid paying tax. The only money you need to be, you can be you'll be paying tax is because there is VAT too. Don't forget there is VAT. You're going to be paying VAT for transactions. You get input, credit, loan, investment, and the likes. You get. So next year is going to be crazy anyway. So, but having track of your record is a one step ahead. Yes, having track of your record, using the smart tax calculator to input every record there, and having an LLC for your bank account for receiving business transactions, describing every transaction you make and keeping record of it, keeping the receipts is very crucial. Yes, linking is inconvenient, but the long-term benefits of actually just paying tax like an employee and stuff like that. Yeah. So now, how do I keep myself protected from excessive tax? Protection sheet. Like I said, you just use open a company, open and use an register as an LLC. Like I said, if you want to register as an LLC, I have my team. You can direct. You can. I'm going to put a link in the description where you can talk to my team, and they're going to guide you to register. It's just 60,000 naira. They will help you to do everything and register you as a company. If you know you're making money online, businesses, shoes, and stuff like that, offline businesses, just make sure that you need an LLC. You understand? Even if you have an LLC, the second thing is what you buy the smart tax calculator and what be calculating every financial transactions. You understand? So that is just it. And yeah, make sure you separate your money. You identify, you describe your money, you separate it, personal income from business money and the likes. Those are the ways you do to like uh avoid paying tax. Starting freelancing next year with hopes of earning a lot of money, will tax be taken on a savings account that has over 10 million? Okay, tax, like I said, tax is not tax based on the money that is already in your account. The tax is not taxable income is based on the money coming into your account. If the money coming into your account is not described properly, or if it's for business, that's when it's going to be tax, or if it's an income that you earn from a certain tax you do, that's what is tax, not gifts, loans, and the likes. Or like I said, if you are really running a business and using your personal account to receive it, you cannot be saying it's gifts every day. So because you're going to be recording everything in your smart tax calculator. So if yeah, is inflows that are taxed, not money that is in your account or money that is outgoing, is not taxed. Because you spend money in your personal account is not going to be taxed. With a business name or LLC, how can one legally minimize tax? So a business name is separate. Don't like registering as a business name. You are still a what? You are still under PIT, paying personal income tax. Yeah. So even if you register, because you register your business as a business name, doesn't mean that you are going to pay CIT, company income tax. You are not yet a company. Business name is paying personal income tax. So you need to register as what? An LLC. That's what gives you the right to be paying as a company, to be paying tax as a company, where you only pay tax based off your net profit, and you can be increasing your expenses whenever you like, from whatever you are doing. You can even be buying a car for yourself and be tagging it as an expense for the company, you get, so that it will not be taxed. So yeah, you just need an LLC. Register as an LLC, not a business name. Don't register as a business name. I beg. Registering as a business name is still personal income. It's still going to be personally taxed. Track your business by using this smart tax calculator. Keep records, keep receipts, everything. Describe your money well when sending it to people. When people send it to you as gift, make sure they describe it well so that it is not going to be taxable. So the structure I talked about for creators, can someone not get any 6 figures or salary role into it? Yes, absolutely. Even if you earn like 200K per month or less, you can register as an LLC. You see, me, I prefer prevention better than cure. Even if the money you make is in your personal account is not taxable or is less, that is not going to be taxed. It's still better you have an LLC, so you are sure that when you don't make above 25 million naira net profit, you are not going to be taxed at all. So it's better like that, you get. So that's just it. And like I said, always record your tax using that smart tax calculator that is going to automatically calculate your tax at the end of every month for the whole year, you get. So you just need to be inserting, okay, make a money comes into your account, you just type it and it automatically calculates whether your money is taxed or not, will be taxed or not. So having an LLC gives you a professional legitimacy, not only like the fact that you are going to be avoiding tax, you are also going to be a professional legitimate. Like they are going to treat you more formally than personally. Personal people are really going to be the ones that are going to be suffering more from this tax thing. You get, because as a company, you can decide to lie as much as you want because they can't hold you accountable for something that me. I say that I use 10 million or 20 million in my business, then you come and be telling me that I'm lying. It's not possible. You get, but in your personal account, like uh, like I said, get an LLC and buy a smart task tracker. If you want to buy the smart task tracker, I'm not even the owner of the smart task tracker. I just find it very helpful because I bought it and it's also helpful for me. And it's what I plan to use for next year. So you can buy that. The link is in the description. And what you use it as what your for the recording of your financial transactions. And you register as an LLC. If you want to register as an LLC, you can go do it yourself, or if you want my team to help you, there will be a link in the description where you reach out to my team and they will help you register everything from beginning to end for just 60,000 naira. So yeah, physical business, how do I legally minimize tax? So if you're a medium-sized provision store or physical business, also go and register as an LLC. Also buy the smart tax calculator, keep records of every transaction of your small shop. If people buy stuff, they pay you money, keep transactions of it, you get. Of course, if it's cash, there's nothing that deals with tax when it comes to cash, you get. Cash is cash, you get. But if you know that that money is going to your account, then you still have to account for it. When you go to POS and insert that money into your account, that money, you have to describe that money well too. So yeah, you still have to register as an LLC, buy the smart tax calculator and track your spendings and everything and inflows. So will tax be based on different accounts or just total balance? Tax is not tax based on the total balance of your money in your account. Your money in your account is not taxable. The money that is already in your account is not taxable. It's money inflow, money coming into your account when it is not for gifts or loan or any of the above that is tax free. You are going to be taxed based on that inflow, not money in your total bank balance. That's for PIT. For a company, it's your net profit, not the inflow. No matter how much comes into your company account, you're not going to be taxed based on that if your expenses is almost finishing that money that come in. You get? And you know your ways, yeah, you know what I mean. You can be smart doing that. So I'm being like FRS are going to be having access to your bank verification number. They have access to all your accounts, linked accounts. You get? So the inflows of money, everything they are seeing how much come into your account. So you cannot escape it, or you feel like they don't know. Stop deceiving yourself. So yeah, that's just it. So do you have any question? If you have any question, you can ask and I will explain. All right. So the smart tax calculator, guys, is going to be in the description. And if you want to register as an LLC, there's going to be a link in the description where you can reach out to my team and they will help you to register as an LLC too. So all the best, and I wish you the best of luck for 2025. Make sure you stay ready, accept things rather than trying to avoid it or trying to illegally uh, bypass your way through it. There are legal ways, like I've explained, on how you can escape those taxes and stuff. First of all, you need to register as an LLC. If you receive a lot of money from business transactions, you need to register as an LLC, which my team can help you with. You can do it yourself if you don't, if you want to undergo the stress, or if you don't want to undergo any stress. My team are going to help you. Check the link in the description and reach out to them. They are going to help you. So, and buy the smart tax calculator is in the link is in the description. That smart tax calculator is going to help you to watch the code every transaction, which is helpful because, like I said, whether your tax is 0%, you're not going to pay any tax, you are still going to file for 0% tax. So that's just it. All the best, guys, and see you on the other side. Ciao.